Here's a calculator to kind of determine potential returns. Let's dive in.
I can enter any amount I want here. This is in this case, this particular investor, we're just modeling $100,000. It's easy math when you just do, the calculation. So 100K, that equates to 2.3% membership ownership of the dollars invested, right? So they're 2.3% of what was invested in the property. Remember, we raised 4.56 million, 4.356. They were 2.3% of that at 100K. So in year one, their cash flow, remember that 7%, would be $7,700, $9,500, $10,000, $10,000. And over the course of 8 years, they would have accrued a total cash flow return of $76,000. And the percentages are here. That is per year. And so when you're analyzing deals or you're looking at opportunities as an investor, you're going to have lots of options hopefully out there. There's some metrics you want to look at. What is the average annual return? What is the average cash on cash? To me, that's almost priority number one, is what is my average cash on cash, right? And then what's the annual cash on cash? So there's average cash on cash and there's annual cash on cash. It can be easily mixed and it's not the same thing. So it's really important for you to look at. So let's look at the cash on cash return, average to date. So we want to shoot for at least 8% cash on cash to you, the investor, over the holding period. So in year one is 7%. The cash on cash in year one was 7.7%. In year two, the return was 9.58. It increased our average because this plus this divided by 2 is 8.68. In year three, it trends up because, again, year three average return goes up. It raises our average. And so over the course of 8 years, the average return per year is 9.52%, which is pretty good. We like that. So if you're evaluating a deal, if that meets your criteria, what you're looking for, then that could be a question to ask. What is average cash on cash? Then there's average annual return, and that factors in, it's the same number, but it factors in the sale of the property. So once the property, or it factors in the proceeds, because you'll get additional revenue or income at the sale of the property. So you can see it goes 9.5, all of a sudden it's 15%. So if I told you, hey, the average return over the holding period is 15%, you might think, wow, I'm going to get 15% per year. That's not true. You're going to get these numbers every year. This factors in proceeds. So it's really important to distinguish that. Upon sale, this property is going to return $45,000 to you based on your 100K investment. Again, it's all about the ratio or proportion to the amount invested. So now I have a $76,000 cash flow over 8 years. I have a $45,000 proceed at sale. Add those two together, it's $121,000. So divide that into your 100,000 and it's a 121% return. Divide that over the course of 8 years and you'll get 15%. So we like to look at another piece that's called equity multiple. In this case, my equity multiple, if I move this total return over 2 decimal points, I get 1.21. So my equity multiple is 1.21. That's a good number. You might see 1.1, you might see a 0.9, you might see all the way to a 2.25 or 3x, right? There's different types of investments have different equity multiples, but it's important to look at as a factor of when you're considering an investment. Because there could be huge, obviously the bigger the number, the bigger the upside, but there's also risk that comes with upside too. So, and how long am I holding that for? So I like to look at 3 things personally as an investor myself, and what I've invested in real estate in this last year is I like to look at equity multiple, average cash on cash. What am I actually going to get in cash flow that their projections are saying? And then what's my average return, right? Overall, over the holding period, including those proceeds. If all 3 of those numbers make sense to me, then I'm interested in possibly looking at the deal. The other thing I like to look at is who is it? Who am I investing with, right? Do I know this person? What kind of track record do they have? Are they a good person? Do I have good experience with them? Or can I trust them? Usually, you need to at least know the person. You need to like the person, and then you get to know their business and what are they using? What are they using to be successful in this business? Do they have a good team? Are they just going off on their own completely without any kind of backup? I invested a lot of time building up our team. We have amazing property managers lined up, ready to go, built long, now strong relationships with them. We have an insurance group. We have contractors that are partnered with our property managers. So this isn't like just me. It's my only show, right? This is, or I'm the only guy at the show. It's a whole group of folks that get together. Obviously, we manage them, but there is a whole group behind us, and of course, we have senior partners. So to be able to go get a loan against a property of this size, you got to have some experience behind you. So I'm partnered with several folks that have been doing this for a long time. This is what they do. They're in property 2025. And so I'm fortunate to be able to work with them and leverage their knowledge and leverage their experience to be able to build up my own portfolio. And so that eventually I can do this completely on my own without their help. But this business has been fantastically supportive. The community is great, and everybody wants to see everyone succeed. So that's all I got. Hopefully, if you have any questions, please reach out, and hopefully this was helpful. And if it wasn't, I'll take that feedback. I want to get better and be more clear about certain pieces to make sure that you understand what we're saying. Thank you.